Can you tell me about any stories where the accounting actually jeopardized a potential deal and what that looked like?
Yeah, actually, unfortunately, I have more stories than we have time for those. We now that being said, we certainly try to do quite a bit of work up front to uncover any issues ahead of time. Like you thought you were going to go to market in a month, well, now it's going to be 6 months because we got to fix all your accounting before we could show it to anybody. That happens quite often, to be honest. We actually had one recently where, unfortunately, there was a pretty big miss in terms of putting together their cost of goods. That tends to be a particular problem area for a lot of e-commerce businesses. And then we ended up having to fully restate the accounts in the middle of diligence, right? What happens there is now the buyer's confidence in what's been presented goes down significantly. You completely lose momentum in your deal process. And now all of a sudden, your buyer is just skeptical about everything. And then ultimately, the price they want to pay now starts to go down. I can't stress enough how much negative things being uncovered in due diligence hurts a deal. It that's what kills deals far more often than even business performance starting to, maybe take a turn. Is in diligence, buyer uncovers something they weren't told about or no one knew about, and it's negative, and then all of a sudden it's a domino effect of confidence. They just lose confidence.